Nobody wanted this recession, of course, but it certainly has kept economists in the spotlight and busy. None busier, perhaps, in the insurance industry anyway, than Dr. Robert Hartwig, president and economist at the Insurance Information Institute. He has spent the last year or two explaining current economic trends and their impact on the property casualty insurance industry. We caught up with Dr. Hartwig in Chicago at the recent Professional Liability Underwriting Society meeting. And we asked him what he sees going on in the economy now, whether he sees signs of a recovery, and what it means for the property casualty insurance industry.
Well, there are many signs that a sustainable economic recovery is underway. However, there remains a disconnect between Wall Street and Main Street. And let me explain for a moment. We've seen the stock market up more than 50% since its March lows. We're starting to see banks and insurance companies report profits, whereas a year ago they were reporting significant losses. However, we're still seeing a lot of trouble on Main Street. We're seeing a lot of bankruptcies of small and medium-sized businesses. We're seeing difficulty for small businesses that want to expand or hire new workers to obtain credit from banks. So while there are many encouraging signs, including GDP growth, which was finally positive in the third quarter of the year, we're seeing a shrinking number of job losses month by month, and that's also good news. The bad news is still in negative territory. The unemployment rate shot up to 10.2%, and it's likely to get close to 10.5% by early 2010. So we've got a lot of encouraging signs out there. However, this process of extricating ourselves from a very, very deep recession is going to take quite some time, and it's going to be painful. And right now we're seeing that disconnect where Wall Street anticipates an economic recovery, one that has not yet hit Main Street America. Typically, the unemployment rate actually continues to rise for 2 to 3 quarters after the economy begins to grow. So if the recession officially ended at the end of June or the end of July, we could expect the unemployment rate to continue to rise through the first quarter of next year and potentially into the early part of the second quarter.
So Dr. Hartwig believes that the recovery is real and sustainable. However, he cautions that some may have to wait longer than others for its benefits.
It's going to be a very uneven recovery across the country. Some parts of the country were hit much harder by this economic downturn than others, particularly those parts of the country that benefited from the economic boom, specifically in housing. So states like California, Florida, Nevada, Arizona are going to be slower to recover because they went so deeply into the recession. They suffered the worst of the collapse. Whereas home prices are stabilizing or even increasing in some parts of the country now, places like that benefited the most from the housing boom are still seeing their prices fall. So states like California may not see a recovery begin until 2 years after the official end of the recession in the summer of 2009. Some states have a lot longer wait than others, and some states, in fact, are doing quite well already. Many of the resource-intensive and natural resource-intensive, energy-intensive states, basically in a swath from Texas up through the agricultural heartland, through the mountain states, up to the Canadian border, these states are doing rather well. Most did not participate in the boom, but they're also natural resource-intensive, and with the high price of natural resources throughout most of this economic downturn, they've done quite well.